So thank you all for coming out today. It's a lovely day in Singapore. Token 2049 is one of the most energetic conferences in the world every single year. This year being the biggest. It feels 2x larger than last year. That being said, I know it's early for the DGens out there and folks just enjoying their time in Singapore, but we're going to get this started off with a bang. Speaking with some of these guests, they got some hot takes, as well as deep insights. These are true crypto OGs, DeFi natives, institutional folks with very, very spicy takes on innovation. That being said, I'd like to start by welcoming Will Wu from BitGet Wallet, Head of Growth. Woo, sorry. I have tea in my hands. I can't clap. Yeah, please. Next, we have Roberto Klein from Backed Finance, co-founder, that is. Frederick Hago, Dune co-founder and CEO. And last, certainly not least, Laszlo Szabo, Klein, CEO and co-founder. So we're here to talk about RWAs. We've been seeing explosive growth, surpassing about, I believe it's 32 billion as of this morning, mostly dominated by, this is credit as well as tokenized treasuries. And as we go further down, you think of commodities as well as tokenized funds. So really, I'd like to start, guys, if you want to go down, give a quick intro on you and what you're doing, and then we'll just dive right in.
Hello, everyone. I'm Will, currently leading the global growth for BitGet Wallets. BitGet Wallet is a wallet that is different from BitGet Exchange. It's a separated app, and we are all-in-one DeFi wallets. Got a PayFi, trading, and everything you want to do related to crypto. Yeah, thank you.
Roberto Klein from Backed Finance. I'm responsible mostly for the regulatory and legal aspects of issuing tokenized stocks. We issue B tokens and X stocks. Any listed product on traditional stock exchange, we can tokenize.
I'm Frederick, CEO and co-founder of Dune. We are crypto's data platform. We make it very easy to understand what's happening on the blockchain, basically.
And I'm Laszlo Szabo, the co-founder and CEO of Kiln, and we are one of the leading staking and DeFi platform for other institutions. Work with 300 platforms among the biggest wallets, fintechs, custodians, and asset managers.
All right, guys, so we'll start with the hot take. Laszlo, we were talking earlier about who the biggest winners and losers might be of real-world assets moving on chain. So please, let's kick it off.
I told you in the background I had like a quite opinionated view of that. I think in your questions, you sent the questions prior, you're asking who are the biggest winners? Is it the chain? So Ethereum, Solana, L2s? Is it the wallets or the platforms in general? Or is it the issuers? And who are the biggest losers? Is it the asset managers? Or is it the banks or the regulators? I don't know. And my view is that, first of all, in TradFi, the biggest winners are actually the asset managers because they kind of reduce cost with tokenized assets. They essentially bypass some banking services and they increase massively distribution. You've seen it with like Biddle and BlackRock, Franklin Templeton and Benji. I can tell you that these asset managers are quite happy of having like new customers, on-chain customers, essentially using their product. I would say the banks might be a little bit at threat because you cut definitely part of their margin, you cut some of their business. I think they should definitely embrace the innovation and potentially being like, the banks that went forward in this market and potentially win in the future, but most of them don't. Also potentially because they don't understand how to build and in this ecosystem. And in crypto, I would say like there's going to be few winners in the chain ecosystem, like as always, but like Ethereum L2s winning in reward assets right now, potentially Solana. And I'm a big believer of like the winners will be the platforms, right? Like the wallets for sure, the fintechs. Sorry, they have the end distribution with the end users and essentially they will be able to offer any type of assets. Every fintech or wallets will be a super app at some point, from equity to crypto assets and everything in between. So yeah.
Understood. I think that's a great tee up for Will. Given BitGet Wallet is very big on user experience UEX, that's been a large theme. Obviously, separate entities, but vertical integration across the board and what people recognize as that brand itself. How do you see users, let's say retail users, benefiting most from this enhanced user experience?
Yeah, I think for the whole RWA, especially from this year, we got lots of like tokenized stocks, tokenized products. We integrated with X stocks and also Ondo Finance this year. The biggest, I echo to the last questions on the winner side. I think users actually is the one that winning lots of benefits in this part because lots of regions like in Argentina, this is the real experience from our side. They want to buy some stock, they want to entering those investment market, but it's really hard for them to doing KYC, even trying to get the accessibilities to this market. So for bigger wallets and for all the lots of platforms that providing the integration services with all these RWA service provider, actually what we're trying to do is that how can we make the user experience more intuitive? Like when those people, they try to buy the tokenized stocks as a tokens, can it be like a pretty similar user experience like how they purchase the normal tokens? How can we make it more like smooth at the same time? This is one of the most challenging part, I think, for most of the platform players when they try to offering the RWA products. But so far, I think even when we're providing those RWA products, it's already benefits lots of users already because this is what traditional finance cannot provide.
Understood. That honestly brings me next to Roberto. We spoke about who these winners are, and you had some very, very interesting stats as to how folks benefit from these real-world assets moving on chain. Was curious if you could expound upon the conversation we had earlier for the audience itself.
I want also to relate to the question of the winners and losers, and that leads to the question of the usability. So in a way, I don't necessarily see it as two groups, one losing and one winning. There's a generational shift. And existing players who are flexible enough to evolve might become winners, even if they are legacy entities. But the truth is that the innovation is led by the user experience. That is the truth. At the end of the day, when the young crowd uses their app for everything, and they want to use their app for finance, and tokenized versions of assets is basically the way to implement this.
Understood. Now,
I comment on the, I think one way I like to sort of try to look at the world is like what are features and bugs of a system? And I think in crypto, there's like a general tendency to assume that everything is like bugs in the like traditional finance system. And I think that, it's not always the case. Sometimes it's actually, some quirk is like a feature of the system. And so I think a key thing is to just, actually sort of first principles understand, the current system and understand where there are actual bugs. And then, I think that will often be, some kind of friction that doesn't need to be there. And then, how can you sort of peel that away and, make that sort of part of the value chain or whatever loose. But I think it's important to like also take it seriously what is there today and like really try to understand if this thing is actually a feature or a bug in the system. And then of course like you need to, it's always about the user experience, how can you get fees down and whatnot. But I think sort of it seems pretty clear that like there's a bunch of bugs and friction in the current system that should go away. And I presume those will be the losers, but I think also, maybe it's not as straightforward or intuitive exactly where the distinction between the features and the bugs.
understood. And I guess, oh, sorry, were you going to say something?
No, just want to respond that maybe I should have started by the users, because of course they are the most important, and I agree with you, Will. And you, Roberto, is like, this is a generation shift, and you have like 500,000 holders of real assets today, but like, if you are in the US, it's quite easy to access potentially a T-bill from the state. But if you're outside the US, I'm not, I'm from France, and these products are very not well distributed. But I'm not even talking about emerging countries, Latin, Africa, Southeast Asia, where all these wallets has start to have massive penetration. And now they will be able to access stock and T-bills through wallets on chain. And this is like a massive shift. It's a massive democratization of these type of assets, which were before only reserved for a certain type of users, potentially the West, and they will be able to access it at low cost. So yes, the biggest benefit of all is definitely the end user.
Understood. And I guess now that we have an understanding of the biggest beneficiaries, Frederick, I guess as our resident on-chain sleuth, how would you think about measuring success and adoption metrics via on-chain analytics?
So I think it's fairly straightforward in a way. I think the supply is clearly like ultimately the supply will be some kind of function of demand also. If you do issue these things on chain, like presumably you do it because someone wants it, and if they don't, it will presumably go away also. So I think you alluded to it initially, but what we've seen so far, we did like a big RWA report a few weeks ago for the RWA summit in New York, and so basically you have, it's like 300 billion stable coins, and then treasuries is like 30 billion, I think. No, sorry.
Treasuries, it's around 8 billion.
8 billion, sorry, yes, 8 billion indeed. And then from there it drops fairly quickly. I think you have commodities, it's like 500 million or something like that.
No, they're at 3 now.
What?
They're at about 3.
3 billion? Okay. You know this better than me. And then I think stocks is like 500 million or something like that right now. So it's still, I think, the orders of magnitude, you almost go down an order of magnitude for each category there, right? So it's still beyond stablecoins, still, fairly nascent numbers. So I think the key thing to look for is really the growth rate, right? Which I think is in all early technology, it's fine that it's not necessarily huge numbers, but just like, what growth rate can we see? And then really understanding, we talked backstage about, what are the exact properties that people want for these different assets? Like, I think it's important that we as an industry don't just be like, oh, because it's on chain, it's great. Like, okay, but who exactly on the other end are actually looking for this specific property when we get this thing on chain? So like understanding that and just keeping track of, you can keep track of the metrics. So just keep watching what things get traction, because it's still obviously early. And then I think obviously like regulatory stuff. If stocks, for instance, actually get more clear regulatory approval in the US would be huge. Right now it's still maybe not super clear. You know more about this than me, but it's only stable coins that's gotten the real blessing so far, right?
Understood. And I guess we could kind of just bounce around for the next question. But as we know that these RWAs move on chain tend to benefit from the Lego moneyness of the blockchain itself, do you expect to see retail users, even institutions, engaging in these crypto native behaviors?
I think that the institutional use comes with size and liquidity. We've seen that with stablecoins. And we're starting to see that also with other asset classes like treasuries that are beginning to reach sizes that can benefit institutions. And we also see a new generation of institutions. So not necessarily the old investment banks of Wall Street, but we see hedge funds and very large crypto projects that have a lot of liquidity and want to deploy capital in an efficient way, and they have the technology to be able to use staking and lending platforms. And I think they are hungry for additional asset classes, but it's a bit of a chicken and egg. You need to get to a size that allows them to use the product, and then they multiply that size by 100.
Understood. And I guess success is path dependence. Are there any key risks that you see that would actually stifle innovation and the adoption of RWAs on chain?
Said risks, right?
Yeah.
Well, I mean, yeah, you might have like systemic market risks in DeFi in general, right? Like the beauty of DeFi, it's transparent. You see the risk in real time, but then there's a lot of liquidity moving very fast as well. So you might see like some DPEGs of like a stablecoin with another, which will ultimately impact potentially lending protocol or vaults where reward assets are pegged with. But I think in that sense, reward assets are actually could be a part of the saver of DeFi, at least for T-bills, right? Like the T-bills rate is not linked to all these degen selling and shorting a DeFi protocol farming, but is linked to the federal bank in the US emitting bonds or not. So at least it gives a certain sense of stability of the yields. And the more and more you have real asset, I think in DeFi, the more you reduce this risk, at least at this point. Because then you still have the risk of like higher risk reward assets, credit funds, other risky products. And we've seen, of course, in the past that this could also impact financial crisis, for example. But I think like for now, in the next 12 to 24 months, reward assets are actually a very good thing for DeFi in reducing the risk.
I think also one of the risks is that when like everyone on the stage here, we're trying to improve lots of the product innovations. But these days, one of the most risky part, I would say, would be operations side and the people's knowledge is actually not catching up with how we innovate the product. So when we're talking about the RWA stock, there might be 100 people, new users, they try to buy this new products or T-bill products, but none of them really knows what is the, maybe even don't know what the stock is and what is the yield looks like for the stock market. So when we try to do lots of different RWA and like during the event this time, I also met someone that doing the durian futures, they make it RWA because in Malaysia, this is huge markets. But for those people that really don't know about this futures market and all those like inventory markets, how can they really get into this market? And the whole service process, like your operations team, your customer service team, how can they serve the people who want to buy this product on chain? I think this would be something that the whole industry haven't yet catch up. And this would making the users feel more unreliable and more uncomfortable when they try to enter this market. And the other thing is that also the traditional institution, they try pretty hard to get into on-chain market, but not many of their teams really have the on-chain knowledge. I think this is also something that's pretty risky. They are trying to catch the market opportunity, but this is more on the high-level strategies. But not many people really care about whether operations teams and those asset managers, are they really understand what is the on-chain looks like. So this is the part of the risky thing. I think if we try to push the RWA in the most smoothly way, we will need to improve as well.
Understood. And we only have a little under 5 minutes left, so I'm curious, what are you most curious about within the RW space, and how does your business benefit most from this curiosity?
I think personally, like I'm very, very excited about more productive assets coming on chain. Like I in general think that finance should finance something and not just be self-serving. And so I think crypto, in many ways, is just like very appealing rails or just like underlying infrastructure for finance, but has really lacked the actual assets on top of it in many ways. Not to be absolutist on that. Of course, there's like a lot of sort of crypto native assets that make sense also, but a lot of them don't. And so I think it's hugely important for the industry to get more stuff on chain. And I think in general, in some shape or form, something should be a claim on cash flow. That is what makes most assets valuable, whether, there are different variations of it. But if you drill down, it's typically what it ends up being supported by, why something should be worth something. So I think in general, I'm very, very excited for it. We try to do as much as we can to create transparency, to show people where the growth is coming and which assets are actually where this is happening. And I think what I personally will looking out for is just trying to see very particular, what use cases, what assets, what end users or buyers or what have you will be there here, and try to be both sort of, have the excitement, but also have the rigor to really try to understand where on-chain is a great thing for these assets, or sometimes maybe not also.
I think one of the future expectation is that I think for this year we already see lots of different regional projects been coming up, because RWA is actually, I think it's a great bridge for some really special local investment product to break the national border, to introduce them to more people on chain. So I think for the all RWA progress going forward, it's great to moving the whole industry to understand how to really connect the Web 2 and Web 3. And all the struggles, all the challenges we just mentioned, is actually progressing and improving quite fast these days. And all those can be something that really helping with the whole industry. Yeah, and from the bigger wallet side, as the platforms and all the other platforms that providing different type of RWA products, we'll try to find out the use case that really the people needs, and for all different types of user scenarios, they will all need this type of product, and we'll try to scale it up in a better way. Like we currently got several millions of users. Once you got a product, you need a more huge user base, then the platforms can help you with this.
As a builder of an RWA product, it seems to me at the end of the day, I stand behind the opinion that usability is everything. So what excites me is how this group of products will reach users in a way that would be intuitive to users. At the end of the day, something needs to evolve there. And someone will find a way to create this appealing to users. And when that happens, when that moment happens, then I think the sector will grow exponentially.
Yeah, I'm excited to see a lot of traditional financial players embrace RWAs and start mint tokenized assets. I'm also excited to see a lot of new users that would have never touched reward assets before through wallets in emerging markets or everywhere in the world. And lastly, I think for us is we building asset management strategies on chain, non-custodial asset management strategies, and I think these asset management strategies will be managed by traditional asset managers and will be composed mostly of RWAs in the future, linked with DeFi protocols. So this intersection of the two offered to millions of users that would have never accessed these type of products before. I think all of that is very exciting to me.
Understood. Selfishly, I would love to continue the conversation. However, we are out of time. I want to thank you all for taking time out of your day to speak with us. I want to thank 1inch for providing us a platform, and most importantly, the community. Thank you for coming out early for most folks during conference season for just listening to this talk. Thank you very much.
Super great. Thanks a lot. And we're